Hi, I'm Goran Gorgievski, Principal at Finance and Risk Consultants. Today I will be discussing with you some basic investment principles and the common mistakes that people make. Before you invest any money, it is important to understand these basic principles. You're probably reading the financial papers, you're probably concerned about the direction that the market is moving. Do you invest in property? Do you invest in shares? Do you just leave your money in the cash? These are common questions that our clients will come and ask us because they are so overwhelmed by the level of information that is available to them in all the different mediums. We found that even sophisticated investors, or so-called sophisticated investors, didn't follow the basic of basics. On reviewing one of these portfolios, we noticed that one of our clients had an exorbitant amount of risk in their portfolio which they were not aware of. This is a very common mistake many investors will make because they fall in love with a particular category or a particular asset. So rule number one, or the first principle, is diversification. What is diversification? Diversification is simply investing in a variety of assets to spread your risk. Which brings us to the second principle, which is understanding risk. Second principle is understanding risk. As a general rule of thumb, the higher the risk, the higher the potential return. As an example, shares are considered to be high risk because they have a higher potential return than something which is considered a conservative investment such as cash or term deposits. How we combine these assets in a portfolio is basically our third principle, called asset allocation. Asset allocation is basically divided between the different classes, that is, growth and defensive. Growth assets are generally your shares or your property, which have growth aspects, that is, the value of these investments can grow over time. The conservative or defensive assets are typically your cash, term deposits and fixed interest, where the capital value of these investments does not change and they just generate an interest return. How we combine these all together, that is the three principles of diversification, risk and asset allocation, is basically dependent on how you want to invest, what you're investing for, your time frame, age. At Finance and Risk Consultants, we are the expert investment advisors. So it's a matter of just contacting us, finding out how we can help you to get your investments in order.